From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Hyde. And I'm Jackie Davalos in San Francisco. This is Bloomberg Technology. Coming up, the NASDAQ trying to shake off what is the worst week in almost 4 months. Earnings fail to inspire and AI anxieties grow. We dig into all angles. Plus, job cuts back in big tech. We hear from the CEO of HP after the company announced further headcount reductions. And Bitcoin down 25% from all-time highs. We dig into the worsening crypto rout in the wake of President Trump's latest tariff threats and a key hack. But first, we check in on these markets, and the NASDAQ actually trying to shake off what has been a dismal week. We're off now higher by 0.75% on the week, down about 5%. And that's as we see overall the anxieties build about what the political consequences are on AI, on tariffs from China, and more broadly, whether or not we can see those exports going into the broader world and into allies as well. We focus in on Bitcoin off by 0.4%. The 83,000 number is where we've got to be focusing on. Really, we've come well off of those highs. We're worried about the macro. We're worried about tariffs. We're also worried about certain hacks and indeed what's happening with meme coins over in Argentina. We'll dig into that in a moment. Move on to what's happening in one of the biggest points drags throughout the week. It has been Nvidia. We are down 8.6%. That is significant when you've got a more than $3 trillion market capitalization on a stock. We've fallen as we see Jensen Huang unable to reinvigorate the idea that this is a company that is the only one you need to really bear fruit for the generative AI transition, Jackie. And a lot of that has political consequences.
Let's get to those political anxieties now, as the UK is seeking a narrow trade agreement with the US focused on technology and AI, rather than a full free trade deal. Trump's willingness to open a trade dialogue marks a breakthrough for the UK, which has pursued deeper ties with the US since voting to exit the European Union in 2016. Bloomberg's Mike Shepard joins us now. Mike, this isn't the deal that people were expecting, but it has big implications for AI. What are they?
Well, it really does, Jackie, because, Donald Trump has made AI and U.S. dominance in this field a big priority. And we saw this right from the start as he took office. He signed executive orders essentially insisting that the U.S. find a way and craft policies that would spearhead innovation and that would clear clunky regulations out of the way. And he also had this big meeting in the Oval Office where Sam Altman and Masayoshi Son and Larry Ellison all came together to unveil the Stargate project of investments in data centers that would help propel this bid for U.S. dominance in the area. Now, the UK matters because what they are offering is, in a way, a European toehold for the U.S. If the U.S. companies like Microsoft and Amazon and other hyperscalers want data centers in Europe but don't want those pesky EU regulations, the U.K. could be a good alternative. And that was what Starmer was, in essence, pitching. Now, the to be sure is that, look, these discussions are in the early stages. There's a lot that could go wrong. And we could see some friction emerge, including over the question of online content moderation. That was a little bit of a clash yesterday between J.D. Vance and Starmer yesterday. But we'll want to watch this space for sure.
Mike, the broader context is as we have CEO after CEO start to speak out about potential restrictions on exports of AI and chips. In particular, we think of the AI diffusion rule. I spoke with Andy Jassy, the CEO of Amazon, just yesterday. We were going to get into all of that, but I'm interested in your take more broadly on how this UK dialogue fits in with what these corporate giants are currently telling the Trump administration to do.
Well, in a way, the AI diffusion rule would put the UK in the catbird seat when it comes to getting access to that kind of investment abroad from the big U.S. companies and from other companies. They would say, hey, look, we would be in that first tier of access under this AI diffusion rule. And to catch viewers up, the AI diffusion rule sets up 3 categories of access to advanced AI chips. The last category is U.S. adversaries like Russia and China. In the middle are most countries, including a number of U.S. allies like Saudi Arabia, Switzerland, the UAE, where we still do a fair amount of business. The first tier is a rarefied group of very close allies like France and like the UK. Now, the difference is that the UK would allow U.S. companies to put plants and facilities there, but without as many regulations. And when it comes to being able to buy chips in the UK, it would be a lot easier because they would have that velvet rope-like access to make those purchases without too many restrictions from the U.S. government.
Mike Shepard breaking down the political context of all of this. Let's get into the investor context now. Lei Xu is with us, Chief Investment Officer at Allianz Bernstein. Of course, we're talking the impact of tariffs, we're talking about tech sector and AI, the growth narrative that currently is questioned. Have you been questioning it more this week?
We always question, obviously, especially since we have had 2 years of, straight up. So, but I think, a lot has happened, and there's certainly a fair amount of volatility in the market because of a lot of the headline risks that you just mentioned. But that said, we actually remain quite constructive still in terms of the backdrop of what's needed to build out for the future of AI. So yes, we did question, and we always do, but based on fundamental research, we're actually quite constructive on the outlook still.
Lei, let's talk about one of the things that was really hanging over a lot of the tech giants that have reported in recent weeks, and NVIDIA as well. That was DeepSeek. It caused a lot of concerns about whether we would need any of these chips, as many of them to begin with. How do you feel about that DeepSeek concern after seeing NVIDIA's report this week?
So when there are two parts to it. When we think about DeepSeek, what we believe is that DeepSeek actually, rather than just saying, oh, this is a model that requires a few $1 million, this is actually a step function and inflection point in the adoption of inferencing, which inherently is actually far more compute intensive than all previous models. Because what DeepSeek is a reasoning model. In simple terms, you ask a question, it will take longer for an AI to answer, but it will give you a much better answer after they thought about it. So what we think is that with DeepSeek and with the OpenAI's O1 Pro that's out there, we are stepping into test time scaling, which is reasoning model, and both of those are inherently far more compute intensive, and the more the adoption of inferencing, the more the need for compute. So that's one. When we think about DeepSeek, rather than just reading the headline, we actually got more constructive because of inferencing. And then when we look at NVIDIA's results, we're not here to comment on individual stock, obviously, but what we are really seeing is that we're still at the very early stage of adopting rack scale compute, which is a huge system level compute. It's very hard to do. It will take time to do. And they're still in the ramping phase, but we are on track. So despite a lot of the headline noise, we remain constructive based on these two things.
One sort of fly in the ointment that I think Jensen Huang wasn't really able to satisfy the investor base on was ultimately China exposure, but more broadly, political implications to getting his technology out, even to allies. This is something Microsoft then went out and put out a note, Brad Smith writing to the Trump administration saying, please reverse the AI diffusion rule. I got to speak with Andy Jassy from Amazon yesterday about it. Just have a listen to what he said.
I don't know how this administration feels about it, but I would say that we share the concern that it has limitations on certain countries who are natural allies of the U.S., who just to be able to do their business and those companies to be able to get done what they want to get done on top of these technology infrastructure platforms like AWS, they're going to need more chips. And so I think if we don't do it, we're going to basically give up that business.
AWS doesn't have a big knock from his perspective in terms of worrying about revenue, but more broadly, are you optimistic that we're going to get a more business-friendly federal government that's going to allow for easier exports, or does not that matter in your thesis for future growth?
Certainly, that's a consideration. And in fact, I think a lot of these political headlines is precisely the reason that you're seeing these gyrations in the marketplace. The volatility is high. But when we just look at the fundamental level, and if you look at these giants, the tech giants, and the amount of spending that they are actually doing in the U.S., and I would put China almost separately as their own ecosystem, that what they're trying to do, I do think despite the volatility we see in the market, there's actually ample demand, even when we just look at the U.S., what we need to do, and how how constrained we still are on the supply side, in fact. So we actually think, yeah, headline aside, we still feel fine.
Let's talk about where that demand comes from as well in some of these AI applications. A big one is agents, and we heard from Salesforce earlier this week that it wasn't seeing the kind of demand it really wanted to see. I know you can't talk about specific stocks, but AI agents overall have been a big part of the narrative in terms of what's going to drive the AI rally forward. Are you concerned at all about that adoption really sticking over the next coming months?
I think when we think about a huge technology change and then innovation such as this, when it's transformational, perhaps it would take a little bit time for it to actually play out. But that said, things are constantly evolving. DeepSeek, that just came out of nowhere, right? Took us by surprise. And that marked an inflection point, in our opinion, in inferencing. And aside from AI agents, I certainly think we're seeing adoption broadly. This is, in fact, one of the fastest adoption that we're seeing at the enterprise level. It will have huge disruptive impact at the enterprise IT infrastructure. And on top of that, what we are also looking at is the new form factor that will be coming out. A lot of companies are exploring automation and humanoid and the Internet of Things, and where AI will play a huge part of it. So if we actually, in fact, DeepSeek, in our opinion, marked an inflection in adoption of inferencing, and we're going to see a lot more adoption going forward. This will be an important year from a lot of companies for us to see what's going to happen, but we are optimistic that we will see more than what's currently publicly known in the market.
I mean, look at the response of some of the Chinese giants to DeepSeek, and you have Alibaba committing so much money, Tencent coming out with its latest model over in China. But I want to bring it back here to the US just to finish this off, because we started this week questioning capacity when Microsoft had that TD Cowen note out and everyone's wondering about whether they're actually cutting some of their leases in data centers. More broadly, what gives you the confidence to say that capacity really is going to be built out here in the US?
We're early and we're capacity constrained. While a lot of the attention has been focused on, Microsoft potentially cutting, and we're not here to comment, we don't know. But that said, let's think about Stargate and let's think about CoreWeave. They're the names that, it's not everyday names that we're still talking about yet in the public arena, and those are companies that are still building out. So, and if we just focus on where we are in the build-out cycle, how constrained we are, and let's not forget that we are still at the very beginning of a product cycle that NVIDIA is trying to roll out. Building out the entire data center with this massive scaled compute. We're so early, so we feel, despite all the headline, we feel pretty good actually. Volatility is part of the market, and I think with all the headline at the policy level, there's a healthy amount of fear in the market. So
that's Lei Chu from AllianceBernstein. Thanks for joining us. Coming up, we'll hear from HP CEO Enrique Torres as the company plans to slash over 1,000 jobs. This is Bloomberg.
Key earnings after the bell, and we dig into the reaction today on the street. We're seeing Dell and HP under pressure, significant pressure, off by more than 5% for Dell. Once again, questioning long-term margins that have been ultimately eroded a little bit as they see NVIDIA take more and more of the lion's share of how they get their servers into the market. PC still under pressure there, but ultimately they are spending in the forward-looking future, still a ramp up, but we're worrying about the near-term guidance for this particular company. Same with HP. It's forward guidance, once again, under pressure from a margin perspective. This is they try to strip out costs by reducing yet more people. They'd already been laying off 7,000. Now they could get rid of another 1,000 to 2,000 roles as they reorientate their supply chain and they reorientate into AI. We actually got to speak with the CEO HP, Enrique Torres. Just hear what he had to say.
Moving manufacturing to the US is one of the scenarios that we are contemplating. We haven't made any decisions yet. It's not only the assembly that we will be doing, it's what will it take to bring all the different components, all the different suppliers that we have, and have them manufactured here. And this is going to be a much longer process, and it's part of the evaluation that we are doing.
That was HP CEO Enrique Torres. Now, let's take a look at Tesla. Shares are down for the 7th straight day, the longest streak in the red in nearly a year. Weak sales have dragged Tesla stock down about 40% from its late 2024 high. Bloomberg's David Welch joins us now. David, Tesla's run-up has really been driven just as much from investor exuberance as much as fundamentals. But why don't you walk us through what we know about those fundamentals right now?
Yeah, so what drove it up over, I think, the past year was a lot of hype, but also a lot of interest in their AI and autonomous vehicle plans that Elon Musk he's made a lot of hay out of that, and they did have a demo of the vehicle, and I think that generated excitement. I think investors, by and large, are looking at their EV business as maybe it's capped out for a bit. The only new vehicle coming would be a Model 2, which could do some volume because it's cheap, but it's going to be a lower margin vehicle. And in a lot of markets, particularly Europe, as we saw the other day, they're under a lot of pressure. There are some consumers who don't like Elon Musk's political position now that he's de facto part of the Trump administration. And I think that's hurting their sales. There's also a lot more competition with other EV companies. I think General Motors, I think Hyundai and Kia are gaining share in the U.S., and I think you're seeing some of that in other markets as well, where European automakers have more EVs, so they've got more competition there. And the other part of this that we really haven't talked about is EV credits. Tesla's made a lot of money on those over the years. If the Trump administration does water down the greenhouse gas and fuel economy rules that make automakers buy EV credits from Tesla, and Donald Trump has talked about that. There is a proposal from Senator Moreno on that would lower those standards. That's less income in the auto business from selling credits that Tesla has. A lot of pressure here, and we don't have really a catalyst in the way of autonomous vehicles that's obvious yet that'll push it back up.
I mean, the share's trading a little bit higher today as maybe the macro picture turns a little bit higher for the broader market, David. But indeed, it has been off by more than 14% over the course of this week, the worst week since October 2023. But as we note with this company, as we do so often, it's not often fundamentally driven. A lot of this, even with earnings that come out that disappoint, the exuberance that comes from Elon Musk gets the retail investors back in and makes institutional investors hold. Is there anything that makes you signal that this is something long-term shifting, that February numbers will be as bad in Europe and that ultimately the shares will continue to reflect on a fundamental basis?
Yeah, look, I think the increased competition and a bit of declining growth in the EV market, particularly in the U.S., but other places as well. There's still growth, it's just not as fast, and you have more competition. So I think as long as investors are focused more on Tesla's EV sales and the ability to generate cash and earnings from that, you're going to have pressure on the stock. Once we actually see some more progress with his robo-taxis, which is really what drove the last rally, and it's apparent that those vehicles are going to be ready, they're going to be working, they're going to be generating revenue. Tesla always has delays with new technologies. That, I think, would rally the stock, but right now I think it's trading on what's happening with their electric vehicle business and not on the hype and the enthusiasm over robo-taxis.
To be fair, analysts still pretty enthusiastic, 32 buys, 13 sells. David Welch, thanks so much. Coming up, Meta and Apollo in early talks for a $35 billion financing package for data centers right here in the US. Details next. This is Bloomberg Technology. Apollo Global Management is in talks to lead a roughly $35 billion financing package for Meta to help develop data centers in the United States, all according to sources. Now, the funding conversations are at an early stage, and there's no guarantee a deal will be complete. Bloomberg Intelligence senior analyst Mandeep Singh joins us for more, and it's more and more interesting. In fact, we're just before you come to you, Mandeep, we've got to go into the White House, where President Trump is indeed welcoming Ukrainian leader Volodymyr Zelensky to the White House. They were going into behind closed doors meetings, lunch, and there will be a press conference at 1 p.m. New York time. Plenty to discuss when it comes to rare minerals. But we bring it back from the White House, from Washington and politics, back to what's happening from a data center perspective. across the United States. Bloomberg Intelligence senior analyst Mandeep Singh. Mandeep, tell us about how we're going to see these more novel financing arrangements happen while even Meta's committing more than $65 billion to AI infrastructure.
Yeah, and apparently, $65 billion may not be enough in terms of the ambitions that Meta has when it comes to, adding data center capacity. Look, when it comes to these AI data centers, you're not just talking about, procuring the chips. You have to think in terms of, getting a land, then, power requirements, transmission lines, cooling. There are so many things that the hyperscalers, even though they operate at pretty big scale, haven't really thought about it from that perspective. And I think that's where a company like Apollo may be a good partner in terms of just making sure they get all the help they need in terms of the scale of these data centers. And I think power is a big constraint right now. And all these companies are trying to figure out what is it that they need help with when it comes to getting the power.
Precisely what Andy Jassy was so concerned about yesterday as well from Amazon's perspective. Bloomberg Intelligence senior analyst Mandeep Singh, thanks so much. Now let's move straight to OpenAI, which has just rolled out an early version of a new AI model called GPT 4.5 to select users. This after hitting stumbling blocks in developing the AI system last year. Let's get to it with Rachel Metz. And Sam Altman, a busy man, he's just become a father for the first time, and then he also manages to post on X about the latest developments. And it's interesting that he's been blaming in some parts a GPU lack here.
Yes. Well, I think some of that was in terms of rolling it out to more people more quickly. And that may be the case. I mean, this is a model that is really large in software terms, and it is really computationally heavy. That makes it really expensive. And that means it costs a ton of money to make, and it sounds like it's costing a lot of money to run as well.
Rachel, there's a lot of these models out there. How do people even know which ones to choose?
This is a great question. And I think increasingly they're not 100% sure, especially if you're like a casual user. If you're more of a user with a specific use case, like you do research or you're a coder, you might say, okay, I know I like this OpenAI model or this Anthropic model, et cetera, et cetera. But OpenAI is actually trying to make this simpler by having their models in the future, not this one, but in the future, they're going to have them more sort of combined and have it be more automated, which model you end up using depending on your query. And that's something I think we should expect to see more of.
That's Bloomberg's Rachel Metz. Thanks so much for joining us. Now coming up, we'll wrap up this week's earnings in the world of streaming and entertainment with Laura Martin from Needham. This is Bloomberg.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Jackie Davalos in San Francisco.
Quick check on these markets because we're trying to stage a bit of a comeback, but it's not going to be able to offset what is the worst week for the NASDAQ 100 since September. We've taken a dive, particularly yesterday when Nvidia was off by more than 8%. Today, Nvidia pushes us from a points perspective higher, as does Tesla, but little inroads being made in what has been a big sell-off throughout the week as we worry about the tariffs, the political anxiety around AI and the ability to export, and more broadly, some of the macro data that we got in the United States. So off by 4.75%. Look at another key risk asset or choice, as we call it here on the show, Bitcoin. Boy, have we seen a sell-off since the highs back in January. We're off by 12% over the course of this week. Yeah, we're used to volatility. It is down 25% from its highs back in January, and there are a myriad of things that have led us lower. Let's talk about that sell-off a little bit more with Bloomberg's Emily Nicole. And yes, many will want to point to the macro, even if sometimes they want to say, look, we've got away from macro pulls and pushes on this asset, but still it is living and dying by sentiment. But there are some idiosyncratic issues that have been plaguing the sector as well.
Yeah, it's really a mixed bag. I mean, if you think about where Bitcoin was at this time at the end of last year, we really did start to think that it was pulling away slightly from macro just because it was having such a great time after Trump's election. And as well, and kind of even at the start of this year, it was still having a really good time going up to a record high on his inauguration day. That has changed dramatically, though, and it definitely couldn't escape what's going on in macro markets right now. In Asia trading and in Europe trading today, it was really suffering, down as much as 25% at one point. Sorry, not 25%, but 25% on the year, but down quite considerably. And then it's now kind of recovered that to now be about flat on the day. So, you know, we really can't rule out how much of that is macro, how much of that is other parts of the crypto markets taking its toll. But as you said, it's a volatile asset. It moves with everything.
Emily, talk to us about some of the potential catalysts on the horizon that could turn the tides for crypto.
So we've got a few things coming up. Obviously, there's an unlock happening for Solana next month, which might be something that could bump that cryptocurrency up. It's definitely been struggling after all of the meme coin scandals we've seen in the last month or so. So that could be a positive catalyst. And for Bitcoin, there's the perennial, you know, will there be a US strategic Bitcoin reserve on the horizon? It's something that Trump promised on the campaign trail. We've not had concrete evidence that is coming yet, but you never know, it could. And if it did, that would probably provide a big bump up as well. The ETFs themselves have also been a bit of a toll for Bitcoin. They've been something that propelled its price higher over the last year, and then this week with major outflows, they've been something that have held it down. So there are plenty of catalysts to look out for, but whether or not they're going to be those that take it back up to what we were seeing in January is another matter.
That's Bloomberg's Emily Nicole. Thanks so much for joining us. Caroline?
It's time for Talking Tech, and first up, TikTok is investing more in Thailand, planning to spend $8.8 billion building AI data centers across the country over the next 5 years. The Prime Minister of Thailand says the new infrastructure will help develop its AI, content creation, and human resource skills. Plus, Skype coming to an end. Microsoft is saying farewell to the internet calling and chat service as people, of course, turn to Zoom and smartphone native apps. Microsoft said Skype's daily user count fell to just 36 million in 2023, while Teams has risen to 320 million monthly users. And Netflix weighing relocating its Los Angeles base. The company is leasing space in Hollywood, buildings owned by Hudson Pacific Properties. But the area struggles with crime, with homelessness. One option for Netflix could be buying the landlord's interest in the buildings. Jackie.
Now let's get back to this week's earnings and entertainment with Paramount and Warner Brothers Discovery, and all eyes on Paramount's Skydance deal, which could close in the first half of this year. Laura Martin, senior entertainment analyst at Needham, joins us now. Laura, before we get into some of the particulars of that deal, I want to get your thoughts on what we learned from earnings this week. Streaming ended up being a bright spot. Are you surprised about that?
I did. Linear continues to get smaller, but streaming is getting big enough in these companies, true of Disney too, where streaming is getting big enough that when you're looking at overall TV, at Disney it's growing, in Warner and Paramount it's still approaching the crossover point. But pretty soon, I would say by the end of 25, streaming will be big enough in all three of these companies to actually offset the linear declines.
We also learned that it takes money. There's a lot of investment and it takes time to really make this content land for streaming audiences. Are you concerned that that could actually weigh on profit margins going forward?
You know, I am, mostly because of sports. What's happening is the biggest viewing and the biggest customer acquisition genre is sports, and sports fees are going through the roof. So that really is what weighs, in my mind, on over-the-top profitability, not to mention that you're competing much more with Amazon, and eventually I think Apple gets into this market, and they sort of have unlimited checkbooks, which could drive up pricing for everything in the streaming world.
When you read your note, Laura, you're always so straight to the point. What we worry about with Paramount, no financial visibility. We've got shrinking year-on-year profitability. You're worried about the scale perhaps being too small. At the moment, we've got a lot to worry about across the entire legacy media. Do we see the consolidation continue to happen?
You know, I think we have to. I think it's a decent question for both Paramount, which has an $8 billion market cap, and Warner Brothers, which has a $26 billion market cap. Can you compete with Amazon, Apple, even Disney and Netflix, like Netflix is $250 billion of capitalization. So can you really compete if you're under $100 billion? I think is a real open question, because this television ecosystem and film ecosystem is sort of moving into larger hands, and they can destroy you with their cash flow. They can just cut price.
They can perhaps just erode with a price perspective, but they've actually been jacking up prices instead. And Warner Brothers does seem to give this glimpse that they're building with Max. It's working, and they're able to perhaps, if they get their movies straight and winning formulas, maybe there's a future here, Laura. Did you get any sort of silver linings to some of these numbers?
Well, so on Warner Brothers, they did give us updated guidance for 25, and we showed no revenue growth for 25 or 26, so flat revenue, and earnings and cash flow still negative is an enterprise level. So I just don't know. We have a hold here on both these stocks. I just don't know why you need to rush and invest in these now, because I don't see a turn where the fundamentals are driving positive returns on invested capital. They don't even have revenue growth here yet.
Laura, Caroline brings up a good point. I feel like every month I'm seeing one of my streaming services prices go up yet again. How much are companies relying on price hikes to really pad some of those margins?
They are, and they're using ad-driven tiers to try to, get people to take, like the average household in America takes 5 services. Well, the only way a lot of homes can afford that is if they take the ad-driven tier of Netflix, which is like $7, and it's not $20, which is ad-free. So that allows them, with that incremental $13 they used to be paying for Netflix before it had an ad tier, that $13 lets them buy Paramount and Max, and so we're getting lower churn because people aren't swapping out as rapidly, but they are taking the ad-driven service, which really in many services earns more than the non-ad-driven services. So part of why they're increasing price on the ad-free service is they're trying to drive you to the ad-driven services where they actually make more money.
What else is going to eventually differentiate some of these companies for you as an investor? Is it really just going to be the content, or is there another way that they can get creative to set themselves apart?
Well, so this is another thing about scale. Bundling's a big deal. Being able to bundle across properties the way Disney does with its parks, or the way Disney does with Hulu, with its entertainment assets like Hulu, Disney Plus, what will be ESPN flagship. Like, bundling is really great at lowering churn. The bigger your company, the more likely you can find a bundle to use where you don't give away margin to a third party. So again, that's a problem that both Paramount and Warner Brothers have. Warner better than Paramount, but the point is, it's nothing compared to Amazon, which can put Amazon Prime Video in the bundle with its shipping. Like, that's the ultimate awesome bundle. Nobody churns out, nobody wealthy churns out of Amazon Prime Video because they're paying for Prime for shipping, and they're getting Amazon Prime Video for free, essentially.
And you've got to buy on Amazon, $250. And the bond news. Laura Martin from Needham, thanks so much. Coming up, we got the details of a new collaboration aiming to speed up development and commercialization of quantum computing. Rigetti CEO is going to be joining us. This is Bloomberg Technology.
Quantum computer developer Rigetti and Taiwan-based server manufacturer Quanta Computer have announced a strategic partnership. The two companies aim to accelerate development and commercialization of superconducting quantum computing through a combined $500 million investment. For more on this, we're joined by Rigetti's CEO Subodh Kulkarni. This is a really major moment for computing. I've never seen so many announcements come out of so many tech giants in 1 month. But let's talk about what this deal means for your business.
Well, thank you for having me here. It's an exciting time for quantum computing. A lot of new developments are happening, as you can see from multiple announcements from ourselves, as well as some other companies. It's an exciting emerging technology with tremendous potential. It's fundamentally going to change the way we do computing, significantly faster, but also significantly cheaper in terms of energy utilization. So a lot of excitement about quantum computing and what potential things we can do with quantum computing. This particular announcement with Quanta Computer, we are really excited. Combined, as you said, with $500 million, we believe we can accelerate the timelines to commercialization. Quanta Computer obviously is a well-known large company. They are the #1 manufacturer of CPU and GPU servers in the world, along with laptops and other hardware things in electronics. We feel really good about what we bring to the table and what they bring to the table. We are a tech dev company based here in the Bay Area in Berkeley. We have a fab in Fremont. Quanta brings their high volume capability, low manufacturing cost capability. Together we can advance superconducting quantum computing much faster and bring it to the commercial market sooner.
That enthusiasm has been priced into your shares of late. We've seen an extraordinary moving market capitalization. Just back in November of last year, it was about $250 million. And now you say you're going to be investing that amount over the next 5 years. Just where does this money come from? And is it right to capitalize on this moment in this way?
It's a good question. Since November, indeed, many quantum company stocks have been very volatile. They have been on the upswing. A lot of it is, I believe, because of exciting technology development announcements that are coming, not only from us, but other companies like Google, Willow chip announcement. You saw Microsoft announcement last week, Amazon announcement yesterday. It's a lot of exciting stuff going on that is bringing enthusiasm about quantum computing. We have managed to raise money in November, December of last year. So at the end of the year, we had about $220 million cash, no debt. That gives us a runway for 3-4 years, which may be good enough to take us to cash flow positive situation. We certainly will continue to look at the capital markets to see whether there's opportunities to raise money. But right now, we feel pretty good about our current cash position. Certainly, with Quanta Computer bringing another $250 million to the table, we feel pretty good about taking the current cash all the way to commercialization. So it's an exciting time. We are looking at a potential opportunity here. I mean, the opportunity is mind-boggling. We are talking about hundreds of billions of dollars of market opportunity. 10, 15 years from now, but still, you need to start doing partnerships and investments now to see that materially happen. So
let's just talk about that opportunity and the exuberance coming from other big players. I sat down with Andy Jassy yesterday and talked about their latest quantum chip announcement. Here's just what he said about the excitement in the space.
Quantum computing is very high potential. It has the chance to solve some very computationally intense problems, and I still think it's realistically a few years away from having a real shot at solving those problems, but you have to solve a bunch of these challenges that relate to quantum computing along the way, and one of them really is around error correction on the qubits, and that's what Oscillate does. It's a very unique, inventive way to do error correction on the qubits that makes a meaningful difference, and we're excited about that milestone.
I'm interested in your take on the different methodologies here. Cat qubits being announced over at Amazon, how they reduce errors and the cost of errors. Google just throwing more qubits at the situation. You've got Microsoft inventing a whole new type of technology, architecture, and indeed substance. Can you win in all those scenarios?
Well, quantum computing is indeed complex, and there are many challenges to be solved. We certainly are very much in the R&D mode right now. We need to perfect the technology. A lot of us are working hard at solving those problems. Andy's statement is right on. We need to improve the fidelity of the chip. We also need to include error correction. And that's what Amazon's announcement yesterday was about, error correction. So there's a lot of things that we need to continue to improve. The superconducting quantum computing technology that we are all part of ourselves, along with IBM, Google, Microsoft, Amazon, also the government of China. The main challenges we have right now to commercialization are what we call improving our fidelity and also incorporating error correction. But at the same time, increasing the qubit count and improving the gate speed. There are probably 100 things we need to continue to improve on. That is what we do day in and day out. All of us feel pretty good that we will be able to continue the improvement and get to the point where in another 4 to 5 years, we will start seeing quantum computers start showing up in your data centers doing practical applications. We call that quantum advantage. So our timeline is roughly about 4 to 5 years from now is when we think quantum computers will really come into data centers and start making a meaningful difference for all of us. But the point is right on. There are many things we need to solve right now.
Same time frame as Andy Jassy has. Rigetti CEO Subodh Kulkarni, fascinating to have you on. Please come back. Coming up,
thank you.
We're going to discuss NASA's latest effort to map the cosmos with a lift from SpaceX. NASA veteran and Harvard fellow Azine Uzo-Okoro is with us for a conversation. This is Bloomberg Technology. US robotics startup Firefly Aerospace is going to attempt a lunar landing on Sunday. It's the first in a series of upcoming missions aimed at expanding commercial activity on the moon. The company's lander, called Blue Ghost, is carrying tools and experiments for NASA. Jackie.
In more space news, NASA is aiming to launch 2 missions atop a SpaceX Falcon 9 rocket on Sunday. SphereX aims to map the cosmos, while the Punch mission will measure solar winds. Let's bring in Ezine Uzo-Okoro, Senior Fellow at the Harvard Belfer Center. Ezine, talk to us about what these missions are actually going to tell us that we don't already know about the cosmos outside of Earth.
So, life wouldn't exist without basic ingredients like water and carbon dioxide. And SphereX is going to use infrared light to map the sky in our continued search for life by finding molecules that are frozen in interstellar clouds of gas and dust where stars and planets form. And what SphereX does, because other telescopes have shown us signs of water and carbon dioxide before, is it goes further with 3-dimensional data that scientists can then use to observe how the composition of water ice changes in different environments. And this occurs at least 9 million times, making it the largest survey of these materials in space, which will also result in the most colorful cosmic map we've ever seen. So that's exciting. And there's so much we continue to learn about the lunar surface. And so it's really an interesting mission to see Firefly go up and collect more data.
How is the U.S. stacking up in terms of space exploration right now? It's great that it's going up on a SpaceX Falcon 9. Obviously, Elon Musk's relationship to Washington is really close these days. Is more going to come out of that in a way that puts us ahead in the space race by any means?
That's unclear, but generally what we've seen is SpaceX as a company has been the primary launch provider for the U.S. government for quite a while now. And what you see is, there isn't any signs of other companies catching up, but we continue to encourage and ensure that we have multiple options. But the company as a whole is doing very well and continues to do so.
What's so great about your background is you've contributed to, more than 60 NASA missions, to policy as well coming on space, Ezine. And just when we're thinking about the opportunities, for example, what's happening with Firefly, the moon, another attempt at this landing that perhaps wasn't nailed on the previous attempt in recent year, how much is this really going to push us forward from a US perspective here in the space race?
I think that, if you look at what we've done so far collectively as a space community in the US, we continue to push the frontiers of space and we continue to be the preeminent leader in space. And this is just another example of that progress. And so what it does is it continues to ensure that our allies are excited to work with us. It continues to show even some of our strategic competitors that we continue to have the edge in space. And
right
at the same time, we have an opportunity to continue to work with other nations. And so there are more collaborative attempts today versus 40, 60 years ago when it was predominantly a tightly, watched space race between two nations.
Briefly, with the Blue Ghost lander of Firefly, when it gets on the moon, what do you hope it shows us? What industry does it open up with moon experiments?
So first, lunar researchers are going to be very, very excited about the outcomes because this data will give us just a lot more information about the lunar surface. We have not spent as much time as we'd like there. As you know, the Chinese have been to the far side of the moon twice, and this gives us an opportunity to have a better edge in the other side of the lunar surface.
Japanese company iSpace also eyeing landing in April as well. This is quite the focus on the moon at the moment. Ezine Uzo-Okoro, it's great to catch up with you, Senior Fellow at Harvard Belfer Center. Great to see you. Meanwhile, let's tie it up because that does it for this edition of Bloomberg Technology. Don't forget to check out our podcast. You can find it on the terminal as well as online on Apple, Spotify and iHeart. And tune in to all those space race accomplishments this weekend. This is Bloomberg Technology.